bring on board the management of Praj Industries. We have Mr. Shishir Joshipura, who's the MD of Praj Industries, joining us on the show this morning. A very good morning to you, sir. Thank you so much for joining us on ET Now. And let's talk about your numbers in particular, because revenue growth, although sequentially it was strong, but it is muted on a year-on-year basis. Order intake also has actually fallen below that 1,000 crore mark in Q4. If you tell us what led to this, why are the order inflows not picking up?
So if you look at the year's result, a very significant shift has taken place in the segments that we serve. As you know, the whole ethanol industry in India under the EBP20 program, the initial major driver was the capacity being created by the sugar companies. And then the starch-based projects started to come in. Due to two major policy changes during the year, one related to issue of price from the FCI, and the second related to ban on use of syrup and molasses B as feedstocks for ethanol generation, led to a situation whereby it clearly impacted the capacity creation, new order finalization, as well as execution. And that probably is the one major shift that happened during the year. However, what we saw that all the initiatives that we had taken, anticipating that we need to start moving into different segments of markets, has also started to yield results. And that's why you see that although there were a very major segment was sort of came to a halt, it still led to a situation of an order book which is near the mark that we have always maintained.
Hi, very good morning, Mr. Joshipura. This is Shrishti also joining in. Onto your financials, if we see your FY24 revenue, then that stood at 3,500 crores, but that's actually a little lower than your guidance of 4,000 crores. Now, what are the reasons for that? If you can highlight some of those for us, as well as the revenue guidance for FY25, what will that be?
Well, we do not issue guidance at any moment in time. So we had not issued a guidance for 24. And as a policy, we will not be able to issue guidance for 25 as well. However, if you look at our order book at the start of the year, it is a healthy order book at about 3,800 crores. And that should augur well for the year as we move forward through it.
Right, your margins in the quarter gone by stood at around 12.8%, and that's at the highest level actually we've seen in the last several quarters for the company. Do you think that this is sustainable? 13% margins, can we expect Praj Industries to post going ahead?
Our effort has been, and we have spoken about it over the past 4 or 6 quarters, that our effort is to start improving our margin profiles through a different set of levers. We are also helped by external environments such as moderation in the commodity prices, etc. But we have also taken several steps internally to enhance the value that we are delivering to our customers, the segments that we are serving, the markets that we are serving, our product mix. So margin is a result of all of these initiatives that we took, and certainly helped by the fact that the commodity prices have held.
All right. Also, Mr. Joshipura, now that the sugar production estimates for the full year has been revised upwards, now the government has the headroom to carry the blending program under juice and B-heavy route. Do you expect the government to ease the restrictions on the use of sugarcane for ethanol production? And what is your outlook on the bioenergy segment?
So overall for bioenergy, I think that things will continue to develop in a very, very positive manner, not only in India, but also outside India. Within India, the EBP20 program is at about 12.5%. So we still have a lot of mileage to cover. And we are sure that as we move forward into the new regime, we will still continue to see a buildup of this. The sugar production being positive is a very, very good sign. And we do hope, as rest of the industry, that this will enable the incoming government to actually decide on a policy direction that is favorable to ethanol.
Right. What's your outlook for the engineering and high-tech business? And I'm asking this for a period of about 3 to 5 years. What sort of an outlook are you envisaging for those businesses? Also, what's the strategy on expanding the revenue share from both of these segments?
So two things we have said, that our modularization effort and offering in the market is finding a very, very large traction. And we are beginning to see some very important development. We have just spoken about a very important order we bagged for building a blue hydrogen project in Europe, which is actually indicating the shape of things to come. The modularization entire modularization effort that we have made, not only for engineering projects outside India, but also extending the modularization effort to ZLD offerings that we have, is finding a very, very positive traction. So we expect that this business will grow leaps and bounds as we move forward into the next 3 to 5 years period. Security system business that you talked about is also on a very, very strong turf now. They have actually built some very unique applications for their offerings, and we believe that as we move forward through the next 3 to 5 years, they will be in a position to combine their offering of ultra high purity water with fermentation capabilities and process system capabilities to actually create unique solutions for the industry. They will also be helped by the fact that India is looking forward to creating a semiconductor industry in India, and the water requirement for semiconductor is very similar to pharma. So we do hope and believe that that will augur well for our business.
All right. Also, Mr. Joshipura, you have been focusing on increasing the share of your international business from like 18 to 20% currently to like 50%. So what are your plans for that? Also, because international business is margin accretive, how much margin expansion could we see, say, over the next 3 to 5 years?
So our international business has shown a very, very strong growth at about 60% over the last year. And one of the reasons for that is that we have started to offer our offerings into different markets as well. Brazil, for example, we just commissioned our first project there, and now we are engineering for the second one. The low carbon ethanol opportunity that is emerging in the United States is becoming very positive because Praj is a very, very unique solution to offer in that space, which does not rely on carbon sequestration, but it still lowers the carbon intensity of the ethanol, which is likely to be used for SAF production. We are also expanding under the GBA program. We believe that as we move forward the next 3 to 5 years, India's leadership in GBA will help us offer our solutions to the global south where the focus is. We believe that in other parts of the world, especially Southeast Asia, where we will see, and Europe, where we'll see emergence of 2G as a technology of demand, because low carbon ethanol will be in high demand owing to the SAF production. So that's one. Two, our modularization efforts that we are making with some of the leading players in the world in the energy transition space, where we have gone through our investment on Praj GenX, our new investment in the Bangalore facility. We will see, we are already seeing a very, very strong inquiry pipeline that is developing there in this space. So we see these two leading our effort into internationalization. We have already stated that our aim is to go to a 50% international and 50% domestic kind of a split between our revenues as we move through the next 5 years. And we are very confident that we'll be on that path. As you can see, over the last 4 quarters, our order book has started to change, and the last quarter saw almost 39% of our order book come from export orders.
All right, we'll leave it there. Thank you so much, Mr. Joshipura, for joining us on the show to talk about Praj Industries, the quarter gone by, and what's the outlook going ahead. Thank you so much once again for joining us on the show. And on that note, we slip into a break on this edition of Buy Now, Sell Now. When we come back, we will begin the techie special of edition of Buy Now, Sell Now. So viewers, don't go anywhere. Our technical analysts are already waiting by.
If you like this video, then like, share and subscribe to ET Now.